Hello, everyone. Thanks so much for joining. We've got some people still joining our webinar. If anyone could just raise your hand if you're having any trouble hearing or seeing us. Otherwise, we'll assume everything's going well. But thank you so much for joining. My name is Amy Denny, and this is your 12:30 Legacy Farmland Fund webinar. And we're so excited to have you here. You are on mute for this presentation, so just submit any questions that you have during in the chat function, and we'll get to those questions during the question and answer period. And I'd like to start with the disclaimer that you see behind you. We just want to inform our audience that this presentation does not constitute an offer to sell or a solicitation of an offer to purchase interests in the Legacy Farmland Fund, and that this material may contain forward-looking statements, involve risks and uncertainties, and has confidential and proprietary information that is solely meant for this audience. With that being said, I am so happy to introduce you to your two presenters, Ethan Branscombe and Eric Mueller. Eric, we are going to start with you as managing partner. We're going to get into your background in ag in a little bit, but first tell our audience about the Sower Investment Partners. That is the financial backing behind this fund.
Sure, and thank you, Amy. And just a real quick thank you to all the participants that are online here today. We're grateful that you're on and wanting to learn more, and hope you find this webinar useful and informational. So Sower Investment Partners is acting as the sponsor, general, and managing partner of a family of funds. And some of those funds include commercial and joint venture funds, as well as two farmland funds. One Sower Farmland Fund, which is an equity fund that we started about 4 years ago. We bought our first farm, and that fund actually takes in investor dollars, and we deploy those into row crop farmland throughout the United States. So that fund continues to grow, and then also Sower Investment Partners is a sponsor and general partner for Legacy Farmland Fund, which is what we're going to be discussing here today. So overall, the entity, the Sower Investment Partners, is managing approximately $350 million worth of assets under management through the various funds. Our team, the Farmland team, has a combination of over 50 years of experience in acquisitions and leadership and management of farmland. And so we bring a whole plethora of experience, and we're just looking forward to presenting here today and visiting with you afterwards.
A reminder for those who are just joining us, you'll be on mute, but please use the chat function to submit any questions, and we'll definitely get to those at the end of the presentation. So Eric, you have had a very long career in ag, and it's been very interesting, and I know you've been in it for pretty much your whole professional life, but I think it was those experiences that led you to start the fund. So if you could talk to us about your experience and kind of some of the situations you ran into that gave you the idea to begin this fund.
You bet. Yep. And to begin, I'd have to go back even further than my professional career, and that's having been born and raised on a farm. So I was raised on a row crop farm up in northeast Nebraska. So we grew corn, beans, oats, barley, alfalfa. We also raised cattle, hogs, and even had a little milk operation going as well. So my entire upbringing was on the farm. That led me into getting through college, and then once I got through college, I started in the farmland brokerage and auctioneering business. And so it was through those experiences that I witnessed several times over and over a couple concerning issues. One of those was just the overall lack of estate planning with farmland families. When I would ask the question before, listing a farm for sale or for auction, Do you have, what's your basis in the farm? The basis is going to constitute what your capital gains tax might be. And so over and over again, I run across folks that didn't have any idea of what their basis was. They didn't have really any estate plan, and that could be a drastic drag on their return on that farm. And so that was one issue. The other issue was I would see repeatedly over and over again farm families being torn apart. So I'd witness at auctions several times, maybe two family members or a family member in one corner of the room and the others in the other corner of the room, and literally where this sale would tear a family apart. And so a lot of times these were farms that were passed down, inherited, and I know the last thing that a patriarch or matriarch would want in this gift that was given down to their children, their family, was for it to tear them apart. And I witnessed it over and over again. So having come across these situations several times, I thought there's got to be a solution. There's got to be something out there other than just simply selling a farm that a family can incorporate into their estate plan, can incorporate into gifting or passing down into their family or charitable organizations or what have you. So that's where the Legacy Farmland Fund was born, and here we are. We launched it about 4 or 5 months ago, and looking forward to just kind of going through and how it works.
Wonderful. Well, Ethan, we're not going to forget about you. You are our Director of Portfolio and Acquisitions. Can you tell us about your background as well and what kind of drew you to come work for Legacy Farmland Fund?
Yeah, absolutely. And like Eric said, thank you to all the participants for joining us today, and hopefully this is a valuable information session for y'all to introduce, not just sower to y'all, but also this Legacy Farmland Fund product. My name is Ethan Branscombe. I serve as the Director of Acquisitions and Portfolio Management for both the Farmland Fund and the Legacy Farmland Fund. I have been here for just right at 7 months. Like Eric, I grew up on a family farm as well. My family farm was a small cow-calf operation in northern Arkansas. I'm also one of 5 kids from that farm, so I understand the challenges that can occur with a family farm being transitioned to a next generation with multiple kids involved. My career has always been in mostly agricultural finance. So for the past 10 years, I've worked with a life insurance company and then also the farm credit system, working with a lot of producers, a lot of agribusinesses, and then in the capital market space as well with those entities. But really excited about this product, about the place that it can have in the market to offer a solution to farmland owners and farm families as a tax advantage way to maintain that asset and the value of it, and then be able to pass it on to the next generation in a very efficient and advantageous manner for them.
Perfect. You talked about the tax advantages. I think that brings us into the structure of the fund, which is a 721 exchange. And without getting into a lot of the financial jargon, can you give our listeners an overview of what the 721 exchange is and how it actually is the backbone of this fund?
Yeah, I'll probably just give a high level overview of I'm sure at this point everyone's wondering, like, okay, well, what is this? How does it work? What are we talking about? Essentially, this fund serves as a way for farmland owners to transfer that asset from the hard real estate, real asset of farmland into a portfolio of farmland through this fund. So a farmland owner, let's say they own, 200 acres of row crop farmland, they can contribute that land into this fund via a 721 exchange, and in return, they receive that same value of the farmland with fund units. So from that point on, they become a strictly passive investor into farmland financially. So we as sower, we then manage that asset on behalf of our fund investors, which are the previous landowners. We manage all the operations of the farm, all of the CapEx that's needed, all of the financial reporting, everything involved with that asset. We will, take over all of that for the contributor. So at that point on, they have those fund units in hand that act just like, shares of stock or shares of a company or anything like that. They can do all the same things with that. They can sell those shares later on if they wanted to do so. They could give those shares away to their kids or foundations, however they wanted to do that. They can hang on to those shares and continue to receive the quarterly dividend payments from the income that's generated off of those assets. But so it's, really a great way to avoid to transition the land into a flexible asset and avoid capital gains. So when the farm is contributed via 721, there's no capital gain event at that time. So that's kind of a high level overview of how the financials work with this fund.
Well, so Eric, let's talk about some of the benefits behind the fund then. What were some of the obstacles that you encountered that you knew you had to solve for when you created this fund for, people to be able to benefit from?
You bet. And Ethan kind of touched a little bit on some of the benefit there, but just going into a little bit more detail on some of the benefits, as far as estate planning goes, with the contribution, again, it won't trigger capital gains, or it'll defer those capital gains to a point in time when those units would ever get sold. Obviously, the basis will follow those units at that time, but on the initial contribution, you do defer those gain taxes. And then it also allows you to with those shares, pass them down, enjoy the returns that they will give in the meantime, or simply liquidate in flexible increments. If you wanted to sell some or sell all, you certainly could do that. You'd have to hold them for at least 1 year, what we call the 1 year contribution period. But once that passes, then again, you'd have that right to liquidate those units however you see fit. That doesn't require a sale of the whole entire asset. So that gives you a nice little benefit there. As far as retaining control at the time of contribution, the contributor can execute or enjoy some carve-out rights that we give. And some of those would include say you have a tenant farmer who's been on the farm for a long time, or even a family member who's been farming the farm and relies on it for their income and for their livelihood. You can and we can grant them the first right to farm that farm back and become the tenant moving forward. So that's one carve out right. We also can give a right for the contributor or the contributor's family to continue using that property for either hunting or family gatherings or what have you. So we also give the right to the contributor to purchase that farm back. So say grandpa or grandma has a grandson that may want to come back and farm the farm. We can give them the first right to purchase that farm back from the fund at the then fair market value. So just a lot of flexibility there. As far as revenue diversity goes, having your farm now becoming a part of a whole portfolio of farmland assets, it gives diversity not only in geographical locations, which comes with diversity in crop types. All those gives you investment security. So now you don't have necessarily a farm in one particular area, but you have ownership in several farms in several areas. So that gives you the security, diversity of the asset and being an investor in the asset class. And then finally, management. So internally, our team, which they're currently doing on our Soar Farmland Fund, our equity fund, is the internal manager of the portfolio, as well as we utilize third-party farm managers. So for instance, right now we utilize Farmers National Company, who's the largest farm manager and broker in the United States to manage our properties, boots on the ground, daily management. And then again, we're overseeing the portfolio and working with them to implement any capital improvements or any other issues that would arise on each particular farm. So those are some of the general benefits. We'll go into a little bit more detail on those as we move forward, but that gives you a little bit of an idea of what you can encounter or enjoy if you do decide to contribute your farm into the fund.
Wonderful. I know I'm from a farming state and lots of farmer friends growing up. I know one of the big things was, those some farms have been in families for generations and they're century farms. I think one of the greatest things is that when you contribute a farm into the fund, it gets to stay in the family name. I know, Ethan, you've got a list of other things that we can do to preserve the legacy for a family once they contribute. It's not the end of the story, it's the beginning.
Yeah, and I think all these things show that the intent of the fund and the commitment of the fund is to preserve the asset and preserve the legacy of the contributors and the original farmland owners. And so the ways we've done that, building little features into the fund is number one, when a farm is contributed into the fund, the fund, we cannot sell that asset without the written permission of the original contributor. So, if that landowner or farmer wants that land to stay in agricultural practices or stay in farming, or it wants to, he doesn't want the farm to be sold to a different entity, then we, as the fund, cannot do that without the consent of the landowner. Along with that, they also can establish the right to lease the farm, the first right to lease the farm, and the first right to repurchase the farm someday. So if they have children, sons, daughters that are looking to farm, or grandchildren that are looking to farm or may farm later on, they can build it in that their family members would have the first right to farm the ground over an outside party. And then special usage rights, a lot of land is hunted. A lot of people enjoy recreational benefits of that land and they want to keep that. And so they can establish themselves as having the first right to use that land for the recreational purposes that they may have enjoyed for 50 years or more, or 100 years. And then another way to kind of show that commitment is, when the farm comes into the fund, the entity that is set up holds the name of that original contributor. So, if the Smith family is the family that contributes to the farm, the entity that holds that name is Smith Legacy Farms LLC. And so that name is tied to the deed and will remain to the deed, so long as that farm remains in the fund. And then, like Eric said, we handle all the management, the reporting, everything that happens on the farm. That they continue to receive reporting on what happens on the farm on an annual basis. So all those things, I think, just really speak to the motivation of this fund, which is to preserve the legacy of these farm families and really build a fund of landowners.
Awesome. It really is the mission that I know you guys have created. Eric, talk again. I know Ethan touched on this in the beginning, but once a farm is contributed in exchange for shares, talk about what people can do with those shares, what those actually mean.
Sure. Yeah. So as I mentioned, after a 1 year lockup of holding on to those units, there's a couple different things you can do. One, if you wanted to some or all of those shares, you can certainly do that by selling those units back to the fund, or even selling them to an outside third party, as long as they're a qualified investor. And so we'd have to approve of that sale. But you'd have those two options, as well as, donating if you wanted to donate some or all to a charitable organization, or utilize some other estate planning tools. You can certainly do that. There's a whole plethora of different things you could do, and it's very, very similar. And Ethan touched on it before, as owning shares of a company or a stock, which is way more flexible, and so many more opportunities that you can do with those units, as opposed to owning the asset by itself without selling it. So that it gives you a few of the options, or at the end of the day, just holding on and retaining those units and enjoying the income that you'll get. We pay out dividends on a quarterly basis, and so you can retain and hold on to those units, enjoy the income, and then if it's in your estate plan to pass those down upon death, you can certainly do that. So just a lot of different flexible options you can do with those units.
I love the flexibility that's baked in. Ethan, why don't you talk about some of the ways that the fund grows in value once the farms are contributed?
Yeah, that's a good point. So one thing that's important to note about this is that when the farm comes into the fund at the then market value, let's say for example, a farm comes into the fund at a $5 million market value at that time in 2024. They're not locked into that value. As the asset values of the fund continue to appreciate, so do the values of the shares. So, the goal as we are all, investors in farmland, is that, the assets will continue to be appreciating over the next, several years, and the value of those shares will appreciate with the value of the assets.
What does it take then if somebody is interested to get into the fund?
Yeah, so for any farm that is considered, we do a pretty standard analysis and due diligence process on those properties, just like we would with any farm that we would analyze on our traditional farmland fund side. We've got several team members with a lot of experience analyzing properties in the agricultural real estate space. But we'll collect as much info as we can: maps, lease agreements, soil types, irrigation capacity, and then look at what the market value is for that kind of land in the area, and then we'll arrive at an agreed upon price for that farm into the fund, and then upon execution of that agreement, then we start a normal 45-60 day due diligence period that will end in a final closing of that property into the fund.
Are there any hurdles? It sounds like everything is so well thought out. Are there any downsides or any hurdles that a contributor needs to be aware of?
The
I'll throw
only
that to you, Eric or Ethan. Sorry, go ahead.
Yeah, I'll just comment and say, the qualifications for farms to come into the fund, number one, at this time, it's row crop only. So it's got to be farmland. It doesn't have to be in any particular state. There's a couple of states, North Dakota and Oklahoma, that we're not able to be in, but mostly any other state where it's row crop farmland, it's eligible for us. The hurdles that we have to get over are making sure that the asset is of a quality that can return the minimum returns necessary for the fund unit holders. So our minimum target that we target is a 2% dividend back to the unit holders. So as long as that farm can meet that sort of hurdle, then it should work and be eligible for the fund.
Anything to add on to that, Eric?
I was going to say the only other hurdle I can see comes from probably on the family side of it, and that's the hurdle of letting the farm go. And I know that's having being in a farmland family, we've got a farm that's been almost 150 years in our family, and so getting to the point of saying, hey, we're going to contribute this farm in, we aren't going to own that anymore. Sure, we'll own a piece or a part of a farmland fund, It's just getting over that hurdle. So those emotional ties can be somewhat of a hurdle, but as Ethan mentioned before, and what we're seeing and visiting with folks is that, you know, the fact that we'll put that name or that deed in their family name, that will last as long as it's in the fund, which would be in perpetuity. You know, that helps. The other real fact is that the farm isn't going anywhere, so it's there. And I always told folks when I was doing you know, either auctions or private treaty deals, was that, you know what, at any time you can drive out, you can go look at that farm, you can go kick the dirt on the farm, and with our carve out rights, you can literally enjoy that property as you had all the years of owning it. So that's just the hurdle I've seen and come across coming from the family side.
Mhm.
Yeah,
Well,
definitely
certainly,
there's that emotional hurdle, but as Eric said, hopefully, you know, the kind of the special usage rights and keeping the connection to that farmland is sort of helps alleviate that, hopefully.
I agree. I mean, I think you began with the end in mind, which was to keep people connected to their farms and keep the legacy intact, and then built the fund up around that goal. I know there's a lot of great organizations out there that we seek to align with in the future, whose whole mission as well is to keep farming and keep crop land in production. So I know this is a hot topic and being developed, and there's only so much of it. Um, well, we have covered all the items that we wanted to cover in our presentation. For those of you who joined our chat function, we're also going to record this and send it out, so you can definitely review it at your own pace. Also, please visit legacyfarmlandfund.com, our website, and you'll see a resources tab up at the top that has a bunch of things on it: videos, past recordings, um, press releases, flyers, brochures, etc., for you to take a gander at and learn on your own. And if you want to, we know highly sensitive topic and it's full of personal financial situations. So Ethan and Eric are available to meet with you one-on-one. Ethan, if you want to flip to the next slide.
Yeah, I might. I
Yeah.
let me go through this financial example real quick before we wrap up. I know we're like at time, but I wanted to go through this sort of example because I think this is a helpful illustration for people to see sort of what it looks like, a traditional sale versus the contribution of the property, and then kind of give an example of how this works in the marketplace. So this is a real simple example. Assuming a row crop farm that's valued at $1.75 million. This top box here is, you know, an example of what a traditional sale would look like, assuming a 50% tax basis on this farm. So you can see the sale price, 1.75. They've got transactional expenses, $74,000, whether that's you know, appraisal, survey, title, broker fees. And then they have a, you know, over $200,000 capital gain payment that they have to pay at that time because they sold. So their end proceeds back to the family is 1.4 and some change $1 million. So 88% of the value. Conversely, when a farm is contributed, basically the exact same numbers, but no capital gains at that time. So the value that the family retains at that is the $1.676 million, over $200,000 of additional value at that time. And then the initial offering is $1,000 per unit, so that family would receive 1,676 units of units into the Legacy Farmland Fund. And then, you know, a common example that we see of situations is here if you had a family with, you know, 4 children, and they're trying to figure out what to do or how to evenly divide up the land. In this scenario, it becomes really simple, really clean. You know, each kid would get their share of those units. If 3 of them wanted to sell and 1 of them didn't, then that doesn't burden the child that doesn't want to sell. There's no buyout that has to happen. There's no you know, it gets back to the whole genesis of this with Eric, there's really no confrontation that should take place with what those kids decide to do with their units afterward. So I just wanted to highlight that and make sure that we went through that, because I think that is helpful to sort of see this example in place.
Absolutely. Okay, well, we do have a couple of questions that have come in that we can answer. And I think we've just discovered a technical glitch. We've had one of our viewers inform us that you possibly haven't been able to see our screen throughout this presentation. So in addition to sending out the recording to all of you, I'll send out this presentation as well in case you have not seen the actual slides for anyone else. Okay, so some questions that we've had come in. Can you talk about how and when do the shares get valued?
Sure. Yep. So when the farm is originally contributed, there will be a value placed on that. And that will be what will dictate how many shares you will receive. And then at the anniversary of that contribution, that each asset coming in will have a reevaluation, and that'll either be through what they call a desktop appraisal, or a BPO, broker price opinion. And then on the third anniversary of that contribution date, we'll do a full blown appraisal. You take that and do that with each asset in the fund. That will give us a way of reevaluating the entire portfolio on a quarterly basis. So each quarter, the fund and the fund units will be reevaluated, and that at that time will be what your individual share price will be worth.
Okay. And what is the return expectation?
So our expectation is higher than the minimum, but the minimum dividend yield back to investors is 2%. And obviously, as we are taking in farms and assets, we are trying to ensure that those assets are maximizing the return back to the fund unit holders. But sort of at this point, we're just setting the floor to say that if it doesn't hit the minimum 2%, then we're not going to be able to take that farm into the fund. But
Okay.
if you look at we really stand on our performance and our returns of our solar farmland fund, and that has exceeded and beat other farmland investors in the marketplace consistently. And so we feel like we have a talented team and a talented game plan in place to maximize the returns for unit holders.
Okay. I think that might have given our latest question its answer, but it is, what is the current share value and dividend?
Yeah, the current share value is $1,000 per unit still. And a dividend hasn't been paid yet. We haven't gotten to the first quarter of a fully funded fund to pay a dividend, so we hope that it's greater than 2%, but we haven't been there yet.
Okay. Eric, Ethan, anything else you want to wrap up with?
I'd just like to say, no matter where you're at with your farm, as far as planning or estate planning, I would just encourage anybody who owns farmland, especially if you don't have an estate plan, to start. And that's to either reach out and start visiting with professional advisors, either your CPA, your attorney, your estate planner. Just get that ball started. So, I grew up in our family farm, and I think this is probably pretty typical in my generation, the generation before. Nobody talked about anything. The can was always kicked down the road of somebody else will deal with it, somebody else will handle it. We're just going to keep farming, and everything will work out just fine. Well, the reason why we're here today is because I witnessed over and over again that that's not the case. The lack of communication, the lack of planning can really cause a lot of dissension in the family. It can cause a lot of unnecessary tax consequences. And so I just encourage everybody to reach out, just to start digging into that asset. It's an extremely valuable asset. You want to make sure that gets passed down or liquidated fairly and equitably, and the way you want it. Preserve your legacy and get started.
I love it. Well, you're not off the hook yet. We've had a couple more questions come in. And I think we have time, so we'll get to these. I like this one. What methods are utilized to encourage the farm tenants to keep soil fertility and quality, at least at the level it starts out?
That's a good question. You know, the question is about soil fertility.
Yeah, what methods are used to encourage current tenants to
So
keep
I
the soil
wouldn't say
fertility and quality?
we do soil testing, at the onset, and I think it's every second or third year, we'll do soil testing on our assets. And so at that time, if we see that soil quality has gone downhill at all, we'll do, normal recommended applications of fertilizer or whatever we need to do on those properties to get that soil back up to this quality. We aren't doing any kind of regenerative farming practices on the properties. We are pretty much sticking to pretty standard production practices and soil quality practices on that.
Yeah. And I can add in there too. So all the farms that we have in both our equity fund and in the legacy fund are all cash rent leases. And so with the majority of those having a flex provision on top of that, but really within those leases, not only is the rent owed, but there's all kinds of stipulations within that lease. And one of those being that the tenant is required to keep the fertility at a high level on the farm. And so, as Ethan mentioned, soil testing will be done on the onset and then ongoing throughout the terms of the lease. And so it really goes back to the tenant to make sure that farm is at the highest quality and gives it the ability to return its highest yields. And so as any other real estate, when you have a lease, you have requirements and things that you need to abide by, and it's no different in our farmland leases.
I see a question on here about what are the management fees. And so I'll just go through that because I think that's probably important to everybody on the call. So, our standard asset management fee is right at 100 basis points of the net asset value of the assets in the fund. And so that's a fee that's deducted off of the returns of the assets back to the investors. So, we see that as a pretty standard, market asset management fee compared to what you would pay for any mutual fund or out there in the marketplace to manage the assets. So I see another question on what's the state income implications for fund distributions. So we have Matt Pickens is our very talented and savvy chief investment officer and CPA who's done a lot of work on this product. So I don't want to be on the hook for the tax questions, but I think for this would just be a standard dividend income. So however that state that you're in would treat dividend income, that would be the tax implication of that. The market for when someone wants to sell their units. So as Eric said, if they wanted to sell those units privately to someone else, they can do that. That I would think the most common scenario for that would be to a family member. If a family member wanted to increase their holdings of the fund, they could do that and keep that a private transaction. If not, then they can sell the units back to the fund, and we'll capitalize and provide the liquidity for those units at that time.
Yeah, one thing I'd like to add in there just reminded me, you can also use your shares or your units and pledge those and basically place debt with those units as collateral. So if you have a need for long-term healthcare, any of those sorts of things, instead of selling those units or those shares, you can use those shares as collateral. And what we use Farm Credit Services of America as our lender, and so we are basically would be a pass through for you to be able to utilize that. And so that's a big benefit too that I forgot to mention earlier, but it is something that could be extremely useful, especially if you have folks that are maybe going into long-term situations. So.
There's another question about, and this is a good question about diversity of the assets and how does that affect the, how do we treat, I think that the question's asking, how do we treat lower quality land with higher quality land? If you're in this industry, it's no secret that, if you take dirt from the middle of Illinois or Iowa compared to dirt from Arkansas or Louisiana, there's a big difference in the productivity of those soil qualities. Now there's a lot of other factors that go into play, including irrigation, and production ability. But the key is that there's going to be various qualities of land from a production standpoint. But with that, these farms are then leased back to tenants at cash rent lease rates. So, a farm may be higher productivity in the Midwest, but it will, more than likely the cap rates on that are going to be lower than what a farm could be in the Delta or the Southeast, or maybe a lower quality area at times. So what we're really trying to focus on is keeping that return, the dividend yield number, back to the investors. So there will be, various quality levels, but as long as the farms are at market prices and at market rental rates, to where the unit holders are receiving the agreed upon and guaranteed returns of the fund, the minimum of 2%, then that's what you're really getting with the diversity. Is you're getting geographic diversity from tenant turnover, production risk with weather, higher yielding opportunities in specialty crop areas, or maybe more niche crop type areas. So that's how we sort of handle the diversity of the land quality areas.
I'm not sure if you guys have answered this, so I apologize if I'm re-asking it, but we have, when you go to sell shares in the fund, what are the transaction costs for selling?
Go ahead, Ethan.
Well, I don't think we have any transactional costs from selling the shares. Correct me if I'm wrong, Eric. We haven't had an instance of shares being sold yet, but to my knowledge, there's no, fee involved with selling your shares.
No, the only fees that are involved are the onset fees. So once the farm has contributed, there are some fees that are associated with that contribution, and then the ongoing management. But as far as the selling of the units or selling of the shares, there are no fees coming back, at least to the fund anyway.
And let's take one last one, relating to the dividend income. The initial target is 2% return. Management fees are 1%, in parentheses, 100 basis points. Is the target dividend to the shareholder then 2%, or is it 1% once management fees are covered?
The dividend yield would be net of the fees back to the fund. So that the 2% yield is a net yield back to the unit holders. So it's not 2% and then we take off our 1% back. But that's a good question.
Hey, well, if there are any other questions, I'm definitely going to be in touch with you all. I'll send you the recording and the slides and some, a couple of our most recent flyers. And then please feel free to ask any questions that we've missed, and we'll get Eric and Ethan to answer those. Also, again, legacyfarmlandfund.com is the website, and there is a resources tab up there. And you have my email from registering for the fund. If there's anything that you need in the meantime, just give me a holler and I can get any questions divvied out, information that you need. So thank you so much for participating and staying with us for this almost hour. And we hope we answered your questions and that you have that you'll like the fund. So Ethan, Eric, anything you guys want to add?
No, I'll just say thank you for joining, and hopefully you can still see the screen, and my email is up there. Eric's email is up there. If you have questions, or if you have a property, that you think might work for the fund, then we'd love to have a conversation and, show you what we can offer for it, and show you, maybe give a little more in-depth details on how this can work for you or your clients. So thank you all very much.
Thank you, guys.
Everyone, bye-bye.